The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, trying to turn my cell phone down so it doesn't ring during the show. What a great app. I don't know. If you've got Android, there's one called Shush. And if you're like me, you turn your ringer off, and what do? You forget to turn it back on. Day later, you got 20 phone calls, 500 IMs. What are you doing? You're playing catch up. Anyway, this just turns it off. You can say just turn it off for an hour or 2 hours, and it'll automatically turn it back on. Shush for Android. Recommend it. And sometimes I forget it during the show or right before the show. But sometimes just those little apps make all the difference in the world, as does, just one day in the market or 2 days in the market makes all the difference in the world. As always, we like to come to you here with the Power Trading Hour at this time.
The following takes place between 2 p.m. and 3 p.m.
And what does that say about everything out here? Well, probably the most interesting thing that everybody's going to look at is that we did rally to 21.41. I think yesterday I was saying 21.87, and I may have transposed it. 20.87 to 20.95 is where I think we would find some kind of move, and then maybe you could get a bounce to 21.20, but I think we've got to go much lower before we see a bounce. If you listen to this show on Friday, I said, do not buy this market. And, I guess the question is, do I need to always put in the fact that I'm not an intraday trader in this? I know that people would buy it, get into the moves, and get out of it 14 times a day. But I'm pretty much a swing trader, so I've been sitting on my hands since last Friday, watching my profits grow, like my waistline. But we were up at 21.41 as a high out here. Volume really never got that exciting in the first 30 minutes or an hour. A lot of times when we see huge moves or trend changes in the marketplaces, we see also a disruption of data. I was trying to go through the options data last night, and it was so messed up that I decided not to use it. My guess is that the options data will look better tonight and give me a better read, but I didn't have any confidence in it, so I haven't changed my view. But I noticed a great deal that if you're looking on websites for data, just before the markets crack or just before the markets turn around, it just goes to mush out there, and goes back to my theory over the last couple of days of paying the IT guy, maybe an extra couple $100 just to pull the cable out, which is what I thought happened in the early 2000s. Data would just stop, or it would be 5 minutes late, and you were always trading behind the curve. But there's always a little bit of that. We also talked yesterday about the single most important chart in the market. We'll get and take a look at that today. It is not looking good, though. 2.2 billion shares as we start the show. And, of course, as always, since the market is nothing but history, and without history, we would have no patterns, and I would have to have a real job. But let's do a little history.
Then it's all just a little bit of history repeating.
It is history repeating. On this day in 1901, U.S. President William McKinley dies after being shot by a deranged, aren't they all, anarchist? Do you have to put deranged before anarchist or socialist or communist? Don't think so. Anyway, during the Pan American Exposition in Buffalo, New York, he was shot. As President McKinley became known controversially as a protector of big business, ooh, which enjoyed unprecedented growth during his administration. He advocated the protective tariff as a way of shielding U.S. business and labor for foreign competition. He successfully argued for using the gold standard for currency. So you gold bugs out there probably feeling all warm and fuzzy today on this day in 1901. Don't like the fact that he got shot and died, but did like the fact that he liked the gold standard out there. But as always, you have to be very careful. And today, if I suspect a sitting president followed the Secret Service guidelines and didn't vary from them, the chances of getting shot are probably fairly minor. If you decide to whiff off somewhere where you are unprotected, probably a lot higher. So I think I would be very careful if I was president or even running for office. What else is going on? Yesterday, of course, a lot of people are talking about William Buffett taking it in the shorts. And, of course, he lost $1.4 billion just on Wells Fargo after the 3.3% fallout yesterday. As we continue to find out, of course, of millions of accounts. This one says 2 million. I've seen 5 million. Who knows? Millions and millions of accounts. Heard Tom O'Brien talking with Tommy O'Brien earlier today. And I've always had a kind of a theory, and that is stupid or liar. And the question is, if they didn't know about it, they should be fired because they're stupid or incompetent. If they did know about it, they were liars. And I always go back to my grandmother, who had some rather quaint sayings occasionally. But one of the ones that she said when she would hear something like this is she said, I've met a lot of men that would rather climb a tree and tell a lie than stand on the ground and tell the truth. And probably I'm pretty much leaning on the side of liar on this one. But what else can you say? It's pretty easy to see what's going on in there. Everybody was trying to puff this bank up. And Mr. Buffett, pretty good about not being in these stocks that have problems in the bookkeeping part of it. Very surprised that he got into this one and got caught, because he's got an army of accountants that normally are very good at digging this stuff up. So it was probably fairly well hid. But we continue on. The biotechs look like they got kind of a nice little rotation out here today. Certainly, I suspect that over the long haul, these things are headed much lower. And trying to run as many shorts as they can before this sector becomes tied to the whipping post. What a great song. Maybe we can find that. Mr. Engineer, David Clayton Thomas, and tied to the whipping post. Anyway, Mylan's chief executive will appear September 21st. That is a date next week. And be grilled to a toasty brown over the EpiPen business once again. Biotechs will be in the crosshairs of a very powerful rifle held by the U.S. House of Representatives. We'll be back after this break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
My friends tell me that I've been such a fool.
Yeah, maybe we'll get into the meat of that. Oh, he's still playing it. Nope, he faded out. Now he's coming back. Okay. Maybe you'll get to the meat of it for the next bump on the inside of it. But I was wrong. That was the Allman Brothers, Tied to the Whipping Post. But what a great song. It could have been David Clayton Thomas, too. It was very close at that time. A lot of bands had that kind of Southern rock, Muscle Shoals sound. This is all the same band, so it's hard to tell them apart if they didn't have the voice that close, but Tied to the Whipping Post. We'll hear more of it, hopefully, in the next break-in. He's got to get to that point where it says, tied to the whipping post, tied to the whipping post. Sometimes I feel like I'm dying. I know I'm not a good singer. Anyway, off now 1 point on the S&P cash, 2.28 billion shares. As we're talking the biotechs, this is going to be September 21st. It looks like it's going to start about 10:30 in the morning. So biotech's going to have a cloud over them. Again, we reported this when it all started and said that, we're going to have at least a few weeks of this. But that takes us in a week from today. So look for next Wednesday for the biotechs to get another beating like a seal, a baby seal out on the ice floe, a redheaded stepchild, and or, of course, a rented mule. Although I'm not exactly sure why it made a difference. I've been on a mule before, and you have to beat them, rented or not, to get them to move. Of course, after the bell, the only thing going on of news note is going to be Oracle after the bell tomorrow night. So it continues to be very news light. We had a little bit of a bounce today with crude, but man, it kind of went the other way. So we're at the lows here. I continue to look and think that we're going to see something like a 2087 to 2095 low. And then this thing's probably going to bounce into late on Friday. back above, and then we're going to probably go sideways into the FOMC meeting. So there's still probably some meat on the bone to the downside. I wouldn't be putting on new trades here. The risk reward, of course, was last Thursday, and we took out the elephant gun in the daily newsletter. A lot of questions about what's going on with Apple, and we will address that right now. One of the guests occasionally on the early days of the Tom O'Brien Show was Joe Granville. Joe lived in the same city as I was, and before I was even ever thinking about being interested in the stock market, knew about him. He was not too far down from a store that I worked at. I worked in the computer department on evenings and weekends. He used to come in. It was a high-end audio, video, and computer store, and I was in the computer department. But he didn't live that far down in one of those mansions that was made in the 1920s. But I knew about his exploits and knew that he was kind of full of bull. Sometimes if people just talk too much, you think maybe there's something going on that's wrong. And he was always, as they say, on the come. But he had a few theories that seemed to be rather interesting and very descriptive about the market. And, you know, I don't think he ever, I'm sure he never recognized me. But I did read in the newspapers locally, he had a piece of glass put in his pool about 1 inch underneath the surface of the water. And he would have big mavens, stock mavens, meet him. And he would purposely have his butler that he hired just for the day, send them out to him at the pool. He'd be on the opposite side of the pool. And he would walk, quote, quote, on water across the pool to them. That kind of gives you just an idea how long this guy was on the bull. But he did have kind of a very interesting trading life. He was perpetually bearish. When he was right, he made a lot of money. He ended up giving it all back and more over time by being perpetually bearish about everything, but made a lot of money. And he had a newsletter that was about $1,500 a month. You know, all you had to do, I think there's some part of being really famous in the stock market that you only have to be right once, really big, and get recognized for it. But he did have some theories later in life when Tom was interviewing Tom O'Brien. And he had this theory that I heard, and it was kind of very descriptive. And he called it the Titanic theory. And he says, everybody, you know, the Titanic's going down. Everybody goes to the back end of the ship. And when interest rates start to rise, guess what? People look for the stocks that are going to be least susceptible to having problems, either getting money or being able to keep their margins. For Apple, they've got all the money in the world already. They also have all the loans and bonds they have. They're not going to need any. They're not going to be interest rate susceptible to higher rates. And I think what we are seeing in this market right now in the last few days is the reality that they are going to go up. It's probably in a year from now, we're probably going to be a 1% higher in the rates. And when you talk about maybe a car that has zero friction and let's say it's a race car that has zero friction and a car that has real friction, let's say it's out there in the wind out on Daytona going around, eventually either the wind or the friction becomes overbearing to even get 1 more mile an hour. And you just have to put so much more power to get it to move anywhere. Well, we're kind of in that market now. The Fed has done everything to remove every bit of friction that it can from at least the monetary system. But that friction is coming back. And stock markets don't look, for the most part, into next week or even next month. There is some very, very nice academic research that shows that the market does forecast the next 6 to 9 months very accurately. And it won't do it on a dime, but it does do it very accurately. What we are seeing now are people thinking about not making money so much as getting into stocks that will lose as little of the money as possible. So what we have is a Titanic heading down. Everybody's going to race into areas where it is least susceptible to the market going down. If you look at 2008, it was the same thing. Everybody looked for any kind of company that, one, didn't need money. Two, if they did need money, they were making such high margins that it didn't matter. 1 or 2%, not going to bother Apple, not going to bother Facebook, not going to face others. But if the market goes down, will they all go down? And the answer is yes. And I think we're seeing a market that's getting ready to tell us that it's going to pull back on higher interest rates over the next year. We'll be back after this short commercial timeout, and then we'll be back with more of me.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Sometimes I feel, oh baby, sometimes I feel,
Hey, found the live version. That's why it's kind of hard to figure out. But tied to the whipping post, like the biotechs, for the next week, at least into next Wednesday. 21.25 on the S&P cash. We're up 2 points off the lows. So no big deal so far. We're off 1 point 2.35 billion shares. Of course, it's going to be a lot more about the close today, but I still suspect that we have one more big day down before any resolution. I still haven't seen anything that approximates capitulation in this move down. And now that everybody's lost maybe 2 or 3 times buying the lows, I think we're probably about ready to see what the bears actually have. Through my daily work, and in fact, if you're watching on Tiger TV or in the Den, you may notice something, and that is that I have all these little volume bars down here that look like matches. Little part that starts is painted red, just like a match. The bars are black. Guess I should give them a wood grain. But that is the short volume, or the short initiated volume for the day. So I know how many trades were initiated by a short position, how many weren't as a percentage of the market when we look at it. There hasn't been, I'm going to say maybe out of the 4,000 stocks that trade more than 300,000 shares a day and have some kind of market cap of some kind. I'm not talking about all the penny stocks out here. But they just haven't seen, no one is willing to short. And as long as nobody's willing to short, other than maybe 30 of the top stocks, it becomes incredibly dangerous. There is nobody to buy when the markets just kind of dip. And that is kind of what you're seeing today. Over the last few days, there has not been any giant rush in other than a handful of stocks that everybody wants to short. I think that there's a part of a lot of people that were shorting Apple getting squeezed out today, and maybe why the super high volume. But you know, Apple, all the regulars, a lot of people are shorting those. But for the most part, if it's not on CNBC every 15 minutes on the ticker, it's not being shorted. And in fact, we had one of the lightest shorting days of the year on Monday. It was incredibly light. For all the people thinking that there are a lot of bears out there, there aren't a lot of positions being gone, at least right now. So I continue to think that almost everybody continues to be incredibly bullish, which makes me incredibly bearish. When everybody is on one side of the boat and I hop off, the boat's going to tip over. Anyway, we were looking at Apple. A lot of these stocks are starting to kind of, we're seeing everybody drive into a few. There was a question earlier in the Den also about Apple and its percentage. It's very somewhere around 13 to 15, I think as high as 17% at one time of the NASDAQ 100. And I think the top 5 stocks end up being 55% of the NASDAQ 100 because it's cap weighted. So again, a lot of people probably go, well, you don't talk about the Dow a lot. You don't talk about the NASDAQ a lot. Well, that's because they're not a very good indicator of what's going on in the markets. They are heavily skewed. And just like the polls that showed a wide variance between the presidential candidates in August, if you start assuming that one party is going to have 40% of its registered voters show up and the other one's only going to have 25, you're probably tilting at windmills out here. Reality is it's going to be a little closer than that. And I would say politics and news and the stock market, not that far away. A lot of the news anchors and the rest of the people on TV have much more desire than to get the story right, to change the discussion and the way that the market's moving in politics, actually. And they want to make it look like everybody's winning on the person that they love. And it's kind of the same thing on CNBC. In fact, we were talking about that earlier on the IBB and the news of that. It took me 30 minutes to dig out when when that congressional hearing was going to be at. I looked at every feed. I looked for Milan. I looked for other stuff. It was incredibly buried. The only reason I saw it was on Bloomberg this morning, was going through the ticker. It was on there once. And I waited for the next hour to try to catch it and click on it. Never came back around again. And I saw it once on CNBC, and that's it. They gave it all of one mention. I think it's a lot of times, especially they know people turn off CNBC when markets turn south for the most part. They'll watch for a couple of days, and then they quit watching, which is the worst part. So if you're Fox Business News or Bloomberg TV or CNBC, you only get paid if people watch, and you don't want to give them any bad news. You want to get a lot of people on that say buy, because only 10% of retail traders will ever short a stock and are real traders. So there is a great deal of that. They're going to flog Apple a great deal. They're going to avoid any of the difficult stories of the stocks rolling over or the markets at lows. They'll do it maybe for a day, but I've seen it today. They will spend an hour and a half on Win and look at another stock that's been halved and spend 2 minutes on it. And that's pretty much the way it is. In fact, that's the next stock I wanted to get into. This is where you see the wheat and the chaff get separated. Win is another one of these stocks. A lot of people were short it. They've had the tiniest, minuscule uptick in people coming to the casinos. And everybody is so desperate to think that they're going to catch a bottom. They are all over this stock. Up today, one thing a little different out here today, though, not a lot of volume in this one. 3.8 million shares is still good. What you have to go back, though, and look at is the longer-term resistance levels just above this. I'm not buying for a minute that this is some kind of giant change in China. I do think that maybe people are just a little too short. But if I was going to short Win, there is a giant gap that I think the risk reward would be good at. It's about 118, 119 if you're watching here. This thing gapped down back then on 15.7 million shares. That goes back to the 29th of 2015. That is long-term resistance. You also have long-term resistance on the July 7th, 2015 high at 111. Probably somewhere in that area is a good chance to probably take a target at this. WYNN, I think it's fattening itself up for a nice trigger. But again, not going to be really affected as much by interest rates and why people are going to this. They're running to the back of the Titanic, and Win is there along with Apple and Facebook and others.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I don't know what that was. Didn't sound like anything that I'd been talking about. Anyway, if you tuned into yesterday's riveting edition of the Power Trading Hour, you would have seen this chart. I said it was the most important thing that you should be looking at. And today it's giving us one whale of a yawn and a lot of Z's. I don't think that you can say that this is any kind of rousing endorsement. People have been flooding in to get the TLT or any of the other funds that would say we are not going to fail. We talked yesterday about one of the best indicators that we can find in the market, and that is the confluence levels. This has everything that I love about this particular indicator, which I don't talk about most days. I'd say 95% of the time when I bring a chart up here during the day, it is something that has an incontrovertible signal. That is, either it's testing a top on lighter volume, and by lighter volume, I don't mean 5%, I mean 40%, 50%, 60%. Everything must go. Oh, I almost felt like I was doing a commercial. But what do you need? I love those highs with light volume. Many times you will hear Tom say, that's where the stock market actually talks. So that's where I go. I go to listen at those highs and those lows, especially when the volume comes in light. Sometimes if it comes in heavy, what you want is it to break out and come back down to that level on light volume again. So I always spend 95% of my time looking at those light volume moves. But occasionally, markets will move incredibly well in ABCs, and guess what? They set up a very nice pattern, as we talked about yesterday, where you use 2 different Fibonacci moves, and you put them together. You take the difference between the 382 and the 618, and if it's nice and tiny, if it has a lot of time between it, and I'm talking months. In fact, the November 9th, 2015 low is the first Fibonacci move. I'm going to say that's significant amounts of time in the market. The second one is the April 26th low at 127.10. You put those two together, and we are right at that level. We're at a couple of gaps up that should be support. So if we fail here, this is an incredibly significant event in the markets and the TLT. I suspect that there's probably some more news to happen out here in the bond market. I'm not a big bond guy, so I wait for these big signals that just can't get any bigger. that if I was blind, I would still be able to see. So we're into these gaps that had high volume up. We, if you want to look at that part of it, we gapped up on the 24th of June with 17.1 million shares in the TLT. Yesterday, we were down on 15.6 million shares, so just a little lighter. We went right to the level that we should see. 133.42 was the bottom of this confluence level, and we got to 6 cents underneath it, came back into it. Now, what did we get today? Did we get a lot of people piling into this thing with volume? The answer is no. 4.8 million shares as we speak. No real move out of it here. The market continues to kind of vacillate in this 2120 to 2130 area. We'll see what the end of the market does, or what the market does tomorrow. But generally, when we get three big moves in a market, if you get one, well, sometimes it can be another one. If you get a second one, like we got, then that's very big. But if you get two, you get about 85% of the chance you get the third one. And that's what makes me think of sitting on my hands and waiting for that third move down that I think will probably now occur tomorrow. And then maybe we have a bounce on Friday and light volume and Monday and Tuesday into Wednesday's Fed meeting. But I think it is possible that this does break. And if it does, it is a monster signal, not a minor signal. And for the most part, I don't get on my high horse and yell and scream and flail myself. But I am flailing today that this is one of the times, maybe 3 or 4 times a year, where you're, as we like to say, your back is against the wall. You're watching all the people come in and out the front door of the saloon, and you got your trusty Smith & Wesson. No, Smith & Wesson. What were they? Colt Peacemakers, ready to go, because you never know who's going to walk into that bar. Can't say that this is going to break. I'm just going to say that everything out here suggests to me that there's something bigger going on in this market other than just a little sector rotation in September. But again, probably this late in the day and Wednesday, we're probably looking at it. I had a question in my email about what our options are showing. I told you a little bit before, I really didn't get another read out here looking at individual stocks, though. I still think that we have a 80% chance of tagging at least 2,100 on the S&P cash before the week's out. Man, maybe even, I'm going to say probably a 70% chance of somewhere between 2087 and 2095, where I would, if you were thinking about buying some calls for Friday's action, that's where I would look to see if you could buy some, 10, 20 cents or something out of the money calls come Friday morning if we do get a beating that I think we're going to get tomorrow. So it could be tough. What else do we have going on here? Checking my email real quick. Give me a call at 877-927-6648, 877-927-6648. Email me at path@tfnn.com. And, of course, you can put messages in the den. What else do we have? Just seeing out here. There's people posting some stuff in the den. We'll look at some other stocks of interest and just see how they were doing. We've been talking about IBM pulling back into at least this double gap. So many of these stocks are setting up that way. IBM pulling back on a little lighter volume, at least so far today, 2.4 million shares. I'm not tremendously bearish on this. This would be the absolute first part, or first place that you would think, or potentially even think about buying IBM on the pullback. I know a lot of people are much more bearish on IBM than I am. I think they've got some interesting technology going forward. It was the one stock that we bought puts on down here in the newsletter on this Brit exit 142.50. I was loading up on those guys. But you've got to look at that. It's a double gap. It goes back to the gap down of 624, which is 9 million shares on that date on June 24th. You gap back up on it. Not a whole lot of volume, but you don't have any trading in that range. And these stocks really like to come back to gaps. They really, 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 I'm going to have to get Sally Fields. Really, really, really love to come back to these double gaps. That's at just 153 to 154. So we'll look for that tomorrow. Be back in a minute for the home stretch.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special 1-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Okay, I'm going to play, since no one gets the Sally Fields reference. Here it is when she was winning her Oscar for Places in the Heart.
And I can't deny the fact that you like me. Right now, you like me.
And, of course, been made fun of ever since. But I forget what year that was. Wasn't that the movie with James Garner? I think so. It was a very touching movie. What else do we have going on out here? The IBB, questions about this. It went up, tried to fill the little gap that we had from the 9th out here. It turtled. It did its prairie dogging. It stuck its head out of the hole and got it lopped off. We're back down to about 285. Some of this could be options related for this week. A lot of people probably short the IBB. And what else can you say? Nice day to run the bears out of this market just before it turns. This is a stock and sector that can make you nutty out here. And I will go back to one of the biggest wins we had last year with being short. Actually, we had some big-time puts on the IBB. And, it's one of these things where these things open up and the door opens up and that's it. And unfortunately with biotechs, if you are short them, you're going to have to probably live through something like this. I was short this thing. We bought the 400 puts on this thing, I think, if I'm going back to it, and had to sit on it for 2 weeks. Then, of course, one day when you wake up, it was all worth it because it dropped 80 points in one day and made, I think, the biggest, maybe one of the biggest scores we made all year in the newsletter on it. That is more how biotech works than anything else. And one of the reasons in our conversations yesterday with the caller, we talked about why I like options in the biotechs a lot better than I like sticking the equity out there for risk reward. But certainly you've got, gaps. We kind of touched the first one in BIIB. Has been one of the weakest ones out here. But you've got the next gap out here. My guess is that the IBB is going to fall and probably going to be led by Biogen itself back down to this big gap that goes on the 21st of July. That's 5.5 million shares. But a great deal going on out here, just coming back. Again, as I've said, so many of these stocks look like they're all primed to come back and hit these double gaps that seem like they're just everywhere. In Biogen, this is the first gap down is on June 7th. That had 8.8 million shares. You gap right back over the same open range on the 21st of July. That one had 5 million shares. And that's why I suspect that even though you had a nice push and sign of strength out here on the 2nd of August, this thing is just marking time to come back down into this 270, 260, well, what is that, 264 to probably 274 range out here. What's the close of the day on that? Is that, it's a lot higher than I thought. 282, and what was the high of the day? 263. So that gap continues to be open in the biotechs. I don't know if there's anything else you can see on it. Watch the TALT. That is what you need to watch. We're only up 29 cents now. My guess is that is going to crack that confluence level. And I think we see the floodgates open up there. At least that's what I'm speculating on today. So when you can, not when you have to. Hang on for the Tom O'Brien Show after this. We'll see you tomorrow, same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.